This is Thanksgiving week. Volume was light today, not surprising, but the market continues to get weighed down here. After this rally from these lows that we had in October, all that now has been given up, and we ran right into the 50-day moving average. The market failed there, and we said at that point that if we break back below this 200-day moving average, that's going to put more downward pressure on the market. That's absolutely been the case. And really, ever since earlier this year, despite this rise in the market that we had in March, April, and May, we've been writing a lot about the problems with trade wars and tariffs and how that was going to impact earnings and earnings outlook. And of course, now that's what's weighing on the market here. All of a sudden, the realization has woken up a lot of the market that trade wars really aren't that good for earnings. Tariffs have now begun to show up in corporate earnings. The stronger dollar has been showing up in deterioration of bottom line corporate earnings. Remember, foreign exports make up about 40% of corporate profits. All of that beginning to now weigh on the markets today. Apple, the big decliner, on concerns about iPhone production. Of course, problems with tariffs and trade wars overseas with China impacting Apple. Watch bonds for a rotation out of stocks and into bonds. And you're actually seeing that bond prices on the 10-year Treasury have been coming up. That continues to really provide for a real backdrop here of stronger earnings. This down drag has not only affected just the S&P, but you're also seeing it in companies like Amazon, flirting with recent bottoms here. So keep a watch on the markets. These economic backdrop, these headwinds we've talked about here for a while, now starting to show up in corporate earnings. Expectations for corporate earnings are coming down for the next year. What about the Federal Reserve? Are they going to potentially soften their stance about hiking more in 2019, particularly as we start to see this weaker data? That's going to be the big question for both you and the markets as we get into next year.